Banking is one of the cornerstones of modern civilization, yet many don't realize just how ancient its roots are. What began as simple practices of safekeeping and trade in ancient societies has grown into a global system that shapes economies, builds wealth, and even fuels personal ambitions. But how did banking develop from basic record-keeping in ancient temples to the complex financial networks of today? And how has it impacted how we manage money and make major life decisions, from home ownership to investments? Let's take a journey through time to explore the fascinating origins of banking and uncover its profound impact on personal finance. Ancient beginnings, trade, barter, and safekeeping. The first inklings of banking can be traced back to ancient Mesopotamia around 3000 BCE, where temples and palaces served as safe places to store valuable goods. Back then, grain, cattle, and other commodities were as valuable as gold. The temple priests would act as early bankers, not only safeguarding these items but also issuing loans, usually to farmers needing resources for their crops. Wait, so people trusted temples with their valuables? Yep, back then temples were like your first ever piggy bank, but instead of coins, they held grain. In return for safekeeping, the temples would charge a small fee, which is essentially the first version of banking fees we're all familiar with today. This system set the foundation for what would become modern banking. By keeping goods safe and providing credit for the future, ancient civilizations unlocked the ability to expand trade and grow their economies. The birth of lending, from barter to coins. As societies evolved, the need for a more efficient way to exchange goods arose. Bartering worked well in small communities, but for large-scale trade, a more standardized medium of exchange was needed. Enter coins, first used by the Lydians around 600 BCE. These coins were made from metals like gold, silver, and bronze, each with its own value, allowing merchants to easily conduct business across vast distances. Did people just lug around bags of coins wherever they went? Not quite. Coins made trade faster, but they also made you a prime target for a coin-snatching pickpocket. To address the risks of carrying large amounts of currency, banking systems began offering secure storage and loans using these coins. This innovation not only protected people's wealth, but also facilitated more complex trade routes and the ability to invest in larger ventures. Medieval banking. The rise of merchant families. Fast forward to medieval Europe, where powerful merchant families like the Medici in Italy transformed the banking world. By the 15th century, these families weren't just holding onto money, they were loaning it out at interest, facilitating international trade through letters of credit and creating complex financial networks. So, did traders just hand over their gold and hope for the best? Not exactly. They got clever and used letters of credit instead, safer and way easier to carry than a chest full of gold. These letters allowed merchants to travel and trade without needing to physically carry large sums of money, significantly reducing the risks of theft. The Medici and other banking families became so influential that they effectively controlled the finances of European monarchs, further embedding banking into the fabric of society. The Renaissance and early modern banking, a new era for personal finance. As the Renaissance unfolded, so too did the expansion of banking services. By the 16th century, banking was no longer limited to just merchants or royalty. Ordinary citizens began to use banks for personal savings, loans, and investments. For the first time, individuals could borrow money to start businesses or even purchase luxury goods, creating the earliest forms of consumer credit. Hold up, you're telling me banks offered personal loans back then? Believe it, people were finally getting a taste of what it feels like to stash and grow their wealth without needing to be royalty. This newfound accessibility laid the groundwork for modern personal finance, as everyday people could now borrow money for personal projects or emergencies, sparking economic growth on a more individual level. The Industrial Revolution. Banking becomes a public institution. The Industrial Revolution in the 18th and 19th centuries revolutionized banking yet again. With the rise of industries like textiles, railroads, and steel, banks began playing a crucial role in financing large-scale infrastructure projects. At the same time, they started offering savings accounts, home loans, and more personalized financial products to everyday people. Wait, banks helped people buy homes in the 1800s? Absolutely. Banks were like,
"We'll loan you the money for that factory and your new home too."
This marked the beginning of a new era where personal finance became a key driver of economic development. People could now save for the future, invest in businesses, and purchase homes, creating a ripple effect that reshaped the social landscape. The rise of central banking, a stabilizing force. With economies growing at unprecedented rates, the need for stability became clear. This led to the rise of central banks in the 19th and 20th centuries. Institutions like the Bank of England and the US Federal Reserve were established to regulate the economy, control inflation, and provide a safety net for financial crises. Central banks really made everything more stable? You bet. They were like the calm in the storm, making sure your money was safe while keeping the economy in check. By controlling the money supply and acting as a lender of last resort, central banks played a vital role in stabilizing national economies, ensuring that banks could continue operating even during periods of economic downturn. The 20th century. The birth of consumer credit. One of the biggest shifts in personal finance came in the 20th century with the birth of consumer credit. For the first time, individuals could borrow money to purchase everything from cars to household appliances without having to pay up front. This revolutionized personal finance by making large purchases more accessible and helping families improve their standard of living. Wait, you could buy a car without all the cash up front? Yep, consumer credit was the financial magic wand, letting people dream big while paying later. However, while consumer credit made it easier for people to obtain goods, it also introduced the concept of debt. Managing loans became a new challenge for many households, and the risks of financial overextension began to surface. The digital age, banking in the 21st century. In the 21st century, we've entered a digital revolution in banking. No longer confined to physical branches, today's banking services exist on mobile apps and websites, allowing people to check their accounts, transfer funds, and even apply for loans, all from the comfort of their homes. Do people really do all their banking from a phone now? Absolutely. Your bank's practically in your pocket, and it's more connected to you than your favorite playlist. From cryptocurrencies to digital payment platforms, the rise of technology has made banking more accessible and convenient. However, it has also introduced new challenges, like cybersecurity threats and the need for more financial literacy in a rapidly evolving world. Banking's lasting impact on personal finance. From ancient temples safeguarding grains to the fully digital banking experience of today, the history of banking is one of continuous evolution. Over thousands of years, banking has shaped how we save, spend, invest, and even borrow money. It's given individuals and societies the tools to build wealth, improve standards of living, and fuel economic growth. What's the lasting legacy of banking? It gave us the tools to build wealth, but also reminded us that with great credit comes great responsibility. As we move further into the digital age, banking's influence on personal finance will continue to evolve, offering new opportunities and new challenges along the way.